following content is a technical analysis on Form Factor Incorporated, a company of the technology sector here off the daily interval. We have this primary symmetrical triangle pattern with a primary uptrend line off the November 2022 reactionary lows, multiple reactionary highs, multitude of reactionary highs and reactionary lows to help strengthen its validation here. And I believe we've come across a crucial crossroad, whereas we have the 50 exponential moving average hovering up above with the 50-day moving average. Just call it a duo and or triple line of resistance, which again offers an objective short trade entry. If not, be careful on some of the longs and or long trade setups that you do currently have. I'll take away the lines here, and what I see here is a potential nice clean head and shoulder looking top here, which would again be the base of the neckline off that primary uptrend line off the November reactionary lows there. And just zooming in here, we've got huge volume profile right up above here, whereas some of these traders are already down 5.5%. And any reckoning will truly come on a solid break below that 200-day moving average on the next move down below, especially if it gets validated. So again, just a nice clean risk-reward ratio where you could set up a 4 or 5% stop loss, 3.5% stop loss, depending on your tolerance and position size, versus that first target 26.59 for a 6.5% drop, down to 24.86 for a 12.3% crash, down to 23.21 on a backfill the gap there for an 18% crash. So very interesting setup coinciding with a strong fundamental catalyst, and I would only expect a pretty quick wave of selling, especially if we start to take out that previous reactionary low here off of the 12th of May there, which will also be a complete backfill the gap and an overshoot of that near-term gap support there, and that's where I would expect some pretty quick wave of selling if we get there. So just key levels to watch, key functioning levels to be respected among some of the key technical momentum indicators across their zero line thresholds here. So just the key inflection point once again, with the charts synchronizing to its key pivot point here. It just adds to a strength of evidence when you're trying to find these key pivotal inflection points to gauge in and to hone in on for any trade ideas.